Okay, let's unpack this.
Great.
Today, we're diving into, well, quite a stack of recent news covering the Indian economy, markets, major companies, the works.
Yeah, and our mission, basically, is to cut through the noise,
Yeah.
right? Find the really important insights.
Exactly. Find those nuggets and figure out what it all actually means for you.
And we've got sources here covering, like, everything. Market performance updates, corporate announcements, economic indicators.
Even job market stuff and personal finance deep dives. It's quite a snapshot.
A very dynamic period, definitely.
Precisely. So think of this as your shortcut, your way to get well-informed on the latest happenings, understand the why behind the headlines.
Okay, without getting totally bogged down, unless the details are interesting.
Which, trust us, some of these really are. Okay, let's jump in.
Where should we start? Markets.
Yeah, let's start with the markets. It's often that quickest temperature check, isn't it? We saw some volatility recently.
Who did? May 27th specifically stands out in the sources.
Right. The Sensex and Nifty 50 benchmarks, they saw pretty significant intraday losses that day. And that was after a couple of positive sessions.
Yeah, it was a clear example of how fast sentiment can shift. The sources suggest it was mostly weak global cues filtering in.
I mean, specific sectors really felt it.
Oh, yeah. IT and financials, they were the main ones dragging the benchmarks down. You could really see it.
And, well, you could see it reflected in individual stocks, too, right? Lots of big names took a hit.
Definitely. Ultratech, Cement, down about 2%. HCL Tech, TCS, Infosys, all down over 1%.
Mahindra and Mahindra, Asian Paints, a whole list typically down like 1% or more.
Yeah, Grossom, Power Grid, HUL, ITC, Titan, NTPC, Tata Consumer. Quite widespread among the large caps.
But it wasn't completely universal, was it, the negativity?
Absolutely not. And that's important. We saw some really notable outliers moving the other way.
Like the defense stocks.
Exactly. Mazagon Dock, GRSE, they jumped around 4%. And sources linked it directly to that potential big Navy order, RDS 44,000 crore, I think.
Wow. That shows how specific news can just override the general mood sometimes.
For sure. Inverted Electronics also gained maybe 0.7% or so. High volume, noted as a top Nifty gainer. Bullish sentiment there. Strong results helped too.
Aditya Birla fashion surged as well, I saw.
Yeah, over 2% amid high volume. So definitely pockets of strength.
That's a great illustration, isn't it? How different things are pulling the market at the same time. Large caps feeling global jitters,
while other factors are propping up specific stocks or sectors. And the sources did point out the broader market was a bit more resilient that day.
Oh, yeah. The mid and small caps.
Right. Nifty Mid-Cap 100 slipped only a little, like 0.17%, and the Small Cap 100 actually managed a small gain.
Interesting. So that suggests maybe underlying domestic factors, company specifics, they're still providing support in some areas?
Seems that way, even when the big headline indices are down because of global stuff impacting the biggest stocks.
But what about IPOs? Still busy there.
Still quite lively, yeah. Burana Weaves listed at a 12.5% premium. Decent, but actually lower than the gray market was suggesting beforehand.
Maybe expectations getting a bit more realistic.
Could be. Or just market conditions on the day. But you still had others ongoing, like Prostorm Infosystems, Aegis Vopak.
Neilsoft refiled, I think. Smaller issue size.
Yep. And big names planning too. Leela Hotels and Grow filing confidentially.
So pipeline's still there. Companies want the capital.
Definitely. But perhaps investors are being a bit more picky about that listing pop.
Okay, so stepping back, looking at a day like May 27th, what does this snapshot tell us about the market dynamic right now? Why should you pay attention?
Well, it tells you the market's complex, right? It's sensitive to global news, definitely.
But sector news can pack a punch.
Huge punch. Creates strong outliers. And there's different sentiment across different market caps. Large, mid, small. They don't always move together.
So understanding that helps you see past just the main index number.
Exactly. You appreciate the multiple forces at play. And that can impact your own investments, your financial thinking.
Okay, let's shift from the daily pulse to the bigger economic picture. We had that massive headline, didn't we?
The one that got everyone talking. India surpassing Japan.
Right. Becoming the fourth largest economy globally. Nominal GDP projected over $4 trillion by the IMF.
Yeah, and the head of NTI Aayog even put a timeline on it, suggesting India could hit number 3 in just 3 years.
Which sounds incredible, a huge milestone in sheer economic size.
It is, but, and this is a crucial but, that the sources really dig into.
Okay.
There's a huge difference between that total GDP size and per capita GDP.
Great. The average income per person.
Exactly. So while the total pie is massive and growing fast, India's per capita GDP is projected around, what, $2,400 this year?
And the sources compare that not just to Japan, which is obviously way higher.
But also to countries maybe you wouldn't expect, like Kenya, Morocco, South Africa, Mauritius. All significantly higher per capita GDP than India.
Wow. Okay, so that really fuels this debate we saw reflected in the articles.
It does. On one side, you have the narrative of India overtaking, not just catching up, emphasizing scale, population.
But the counter-argument is pretty sharp.
Very. Saying, look, the headline figure hides huge disparities. One analyst flagged that growth disconnect, India's hunger index rank, for example, is lower than Nigeria, Kenya, Ghana, despite the much bigger GDP.
So the point is, matching the quality of life, that's a different race altogether.
That's the argument. Things like healthcare, infrastructure, education, reflecting average income levels. That could take decades, not just a few years, to bridge the gap with more developed nations.
That really grounds the headline number, doesn't it? It's not just about the national total, but how it translates down.
Precisely, how it feels for the average person.
But the sources did have some positive signals, too, reinforcing the overall momentum.
Oh, absolutely. The RBI, the central bank, announced a massive surplus payout to the government, over Rs 2.68 lakh crore.
Much higher than expected, right?
Yeah, apparently boosted by gains from dollar sales, forex management. It's a nice shot in the arm for government finances.
And the government itself seems confident.
Government sources quoted see the economy on strong footing, even with global trade tensions. And they're hoping for a boost from a slightly above normal monsoon, crucial for agriculture, rural demand.
Okay. And what about the bond market? That often reflects confidence, too.
Well, the yield gap between Indian and U.S. 10-year government bonds, it's shrunk to a two-decade low, around 164 basis points.
Which usually signals growing investor confidence.
Generally, yes. But one expert source added some perspective, pointed out the need to keep deepening India's domestic bond market.
How so?
Well, they made the comparison that the market cap of just Microsoft or Apple or Nvidia, each one is bigger than India's entire bond market.
Whoa, okay, so progress, but still room to grow the financial infrastructure itself.
Exactly. It's not a negative, just highlights an area for development.
So pulling this bigger economic picture together, the headline growth, the per capita reality check, the RBI boost, the bond market signals. How does this connect back to, you listening? Why does that GDP versus per capita distinction actually matter day to day?
Oh, it matters hugely. National GDP growth, that creates the big framework, right? Attracts investment, potentially generates wealth. But per capita figures often give you a much more realistic sense of average income levels, what people can actually buy.
Yay.
Access to basics like healthcare, education in your own community.
So understanding both helps you gauge the real climate.
Definitely. Both the overall potential and the on-the-ground reality that affects your own financial situation, your quality of life.
Okay, let's zoom in now. Look at some specific trends across key industries, because these changes directly impact, well, the services you use, the opportunities out there. Sources covered a lot.
They really did. One big theme I thought was in telecom, a major government push for next-gen tech.
The new National Telecom Policy, 2025-2030.
Yeah, aiming to seriously boost R&D spending, targeting Rs 1,000 crore a year. Up from, frankly, a budget that sources said was largely unutilized before.
That's a big jump in ambition, and they're aiming high with 6G patents, too.
10% global share in 3 years, apparently.
Very ambitious.
And closer to home, for consumers, spam calls.
Yes. TRAI, the regulator, is supposedly prepping tighter rules to finally tackle that headache. Everyone hopes so, anyway.
We can dream. And big players are moving on 5G rollouts.
Yeah, Vodafone Idea planning 75 cities soon, using a new playbook, working with Nokia. But the sector's also dealing with legacy stuff, like the Supreme Court dismissing petitions on those AGR dues. That's still hanging over some operators.
Okay, shifting gears to real estate. Sources highlighted continued buzz, especially at the high end, and from overseas. Definitely. Mentioned strategies the wealthy use, and how NRI investors are playing a bigger role. Their share reportedly jumped from like 7% to 20% over 10 years.
Shows growing confidence from the diaspora and domestic wealth finding its way into property.
Yeah. And specifics too, like Mumbai still being the priciest office market, but Hyderabad now second. Reflects that growth in southern hubs.
And on the other end, the affordable housing scheme, PM Awas Yojana, got extended.
To December 2025, yes.
Okay. What about energy? There was a big milestone mentioned.
A global one, but significant. Clean energy investments reportedly overtook upstream fossil fuel spending for the first time this year.
Wow. India is part of that trend, but with challenges.
Right. Sources flag the need for better financial models to get private money into things like nuclear energy.
And issues with states delaying payments for renewable power?
Yeah, delaying those purchase agreements creates uncertainty for the developers putting up solar and wind farms.
Okay, lots happening there. What else stood out? Aviation seemed busy.
Yeah, aviation always seems to have drama. An Indigo flight hit by hail, but landed safely, thankfully.
But also lots of competition stuff, lease deals, lobbying allegations.
Exactly. Indigo clarifying its Turkish lease deal for Istanbul flights. Reports, denied by Air India, that Air India had lobbied against it.
And ground handling shakeups.
Big time. Turkey Celebi apparently lost its concessions at Mumbai and Ahmedabad airports, replaced by Indothai at Mumbai. Big financial hit for Celebi, staff cuts mentioned. Shows how tough that support services market is.
Intense. And Leela Hotels planning an IPO ties into that travel and luxury demand.
Absolutely.
What about other bits? E-commerce, manufacturing?
Yeah, a few interesting points. Government removing hurdles for leather exports. Discussions heating up around dark patterns on e-commerce sites.
Those sneaky designs trying to trick you.
Exactly. Talk of penalties. And digitally, YouTube seeing a surge in long-form video watching, more people using connected TVs in India.
Interesting. Concerns too, though, about streaming platforms watching users, fake managers for influencers.
Yeah, the digital world has its dark corners. On a positive note, manufacturing industry hiring reportedly jumped significantly.
And Brahmos Aerospace reserving jobs for Agnivirs, the short-term military recruits?
Right. Specific initiatives there.
Okay, so thinking about this whole range, 6G plans, real estate prices, clean energy shifts, e-commerce rules, travel headaches, how do these sector trends actually, ripple out? How do they affect things you use every day? Your phone service, travel, online shopping?
Oh, they shape it directly. That telecom push could mean faster internet for you down the line. Real estate trends. They hit housing affordability, change your city.
Energy policy affects your electricity bill, right?
And availability. E-commerce rules could make shopping online less, tricky. These aren't abstract trends. They translate into tangible changes in the services and products you interact with daily.
Okay, let's zoom right in now to the really personal stuff, jobs and personal finance. And the picture on the job market from these sources, it's complex, almost paradoxical.
It really is. You've got these reports highlighting pretty big challenges.
Like the graduate unemployment numbers?
Yeah, sources quoting figures like 83% of recent engineering grads, 46% of B-school grads, still without job or internship offers. That's sobering.
And a sense that companies are changing how they hire, looking beyond just the big college names.
Right, more focus on specific talent, actual skills, less reliance on just the premier college tag, maybe?
And we saw actual workforce reductions mentioned, Ola Electric, Yes Bank, laying off staff.
Adds to that feeling of pressure. Plus that investment banker warning about AI hitting white-collar jobs first and fast. That got picked up.
Echoes those global predictions, like from the World Economic Forum, right? Lots of jobs displaced by tech, even if new ones are created.
Exactly. And the WEF report highlighted the need for both tech skills, AI skills, but also those fundamental human skills, creativity, resilience, adaptability.
Okay, so that's one side, the challenging side, but then contrasting really sharply.
You have news of absolutely massive investment announcements. Huge job creation potential flagged.
The ones in the Northeast. Adani, Vedanta, Mukesh Ambani.
Yeah, planning investments over Rs 205,000 crore combined. Vedanta alone projecting potential for over 100,000 jobs.
That's enormous. Signals real confidence and potential for big regional growth.
It does. And we also saw positive overall hiring data for June activity, up 12% year on year, apparently. Manufacturing saw a huge jump, 43%.
E-commerce, logistics still active too.
Yep. And specific schemes kicking in, like the PM internship for EWS students or companies like Brahmos reserving jobs. So a really mixed bag.
But the sources really drove home the mismatch with some stark examples, didn't they?
Oh, yeah. Those stories are powerful. Tens of thousands of postgraduates, graduates applying for basic contractual government sweeper jobs in Haryana.
And over 15,000 degree holders applying for maybe 1,800 low-wage handyman jobs at Mumbai Airport, earning around Rs 22,500.
It just perfectly illustrates the challenge, doesn't it? A huge pool of educated people struggling to find work that matches their qualifications or expectations.
Right, alongside sectors and regions seeing booming growth and investment.
Exactly that mismatch.
And what do employees actually want? The sources touched on that, too.
Seems pretty clear. A study found 80% of Indian employees are looking for better pay and benefits. That's the top priority.
Customizable health benefits were important too.
Yeah, 61% valued that.
Yeah.
And for tech workers, hybrid work is huge. 77% want it.
So money, health, flexibility. Key drivers right now.
Seems to be the case.
Okay, let's shift to personal finance. Again, the sources covered a ton of ground here, from investment ideas to savings, debt, benefits.
A real mix. For instance, that low-risk value investing idea, drawing from Manish Pabrai's Dandho investor philosophy, focusing on downside protection. That got mentioned.
And discussions about investing choices, U.S. stocks like Apple, Amazon, versus gold or Bitcoin.
Yeah, the classic dilemmas. The sources basically implied, well, it depends, right, on your own situation, your risk tolerance. No single answer.
What about household finances overall? Savings, debt.
Data showed household net financial liabilities tipped up a bit last fiscal year. But importantly, overall financial savings apparently rose back to pre-pandemic levels.
So maybe people are juggling both, managing debt but also rebuilding savings buffers.
Could be. Reacting to the economic climate, perhaps. Trying to build resilience.
And lots of practical tips and updates, too. Loans, credit scores, emergency funds.
Absolutely. Mention of different loan types available personal, specific ones like PNB Matrikva or Bandhan Suraksha, even education loan guarantors. Tips for boosting your credit score.
The importance of rebuilding that emergency fund, a foundational step.
Crucial. And updates on retirement savings EPF rate ratified at 8.25% for FY25. Guidance on transferring claims. Things people need to know.
Sector funds were mentioned, balanced advantage funds, tax benefits for parents of autistic kids.
Yeah, specific financial tools and support measures, even things like the Ayushman Vandana card for seniors.
And looking ahead, mentions of future payment systems, BBPS, voice commands.
Yeah, hinting at where things might go. Also, OCI lending rules claiming UPS benefits. Even a concept called water versus fire, though the sources didn't really explain that one.
Okay, something to look up later maybe. A fascinating range, though. From basic savings advice to complex strategies and niche benefits.
It really covers the spectrum of personal finance needs.
So thinking about both these job market trends, the paradox, the skill shifts, and all these personal finance points, how does this relate back to you, the listener? Your own career path, maybe your job search, your financial planning right now?
Well, that job market paradox,
Yeah.
it really screams adaptability, doesn't it? Continuous learning, skilling up.
And maybe aligning your skills with where the growth actually is, seeing that contrast between graduate struggles and specific sector booms.
Could be key. And on personal finance, the sheer variety of topics covered just underlines that you need a holistic approach. It's not just about investing.
It's managing debt, building savings, understanding benefits.
Exactly. Being aware of how regulations are changing, how tech might impact your money, the whole picture.
Wow. Okay. That was a lot to get through. A real deep dive into some complex but definitely interconnected information.
It really was. From market jitters and big economic debates, right down to industry shifts and the very personal realities of jobs and money.
And it just highlights, doesn't it? To be properly informed, you really need to look beyond the single headline.
You do. You need to see the multiple layers, appreciate the nuances, the conflicting data points sometimes, the stories behind the numbers.
Absolutely. Get a much, much richer picture connecting these dots than just skimming the news.
Indeed. It helps you move beyond just knowing what happened to starting to understand why it matters and maybe what it could mean going forward.
So the final question then, what does this all mean for you? As you process all this information, think about the economic landscape we've just mapped out. Consider this. Given this simultaneous picture, significant national growth headlines bumping right up against stark reports of job market struggles and income disparity, what one specific insight or maybe a piece of information from this deep dive will you actively use? How might it help you reassess or inform a decision about your own career, your skills, your financial planning in the coming weeks?